it's fake.
No. No.
That bit always gets me. Right. Hey, folks. So Amazon AWS has had a big outage and nothing's working. So we use a thing called Restream, and Restream refuses to stream anything at the moment. So for those, there we go. We've got this thingy here saying due to an AWS outage, yada 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 yada, not working. So we tried Riverside, that didn't work, and here we are with trusty old Zoom. It's like 2020 all over again. And we have to wrap this up because Ridges has an AMA at 4 o'clock UK time. So, Mark, who do we have? We're sort of reverse roles here.
Yeah, so we're all over the shop. We've got Seby from Resi again. like a welcome guest here now. Pops his slippers on, wanders in for another episode of Revenue Search, only this time on Zoom. And of course, he's always got news for us. So, yeah, as always, excited. I don't think it's going to be one of those madly long revenue searches. We know what Seby does. He's been on Revenue Search relatively recently. So we know exactly what game he's playing. But Seby, what have you got to share with us today?
Or maybe, Seby, do like a 15-second, what does Resi do for my grandma and Mark's grandma or Mark's mum?
Perfect. Well, thank you guys for having me again. Love being here, and I love that we're on Zoom today. This is kind of intimate and fun. It's good to see some faces watching. 15 seconds on Resi. Resi is the real estate oracle. The entire real estate industry or proptech industry is on lockdown because of the gatekeepers essentially gatekeep all the data. Right? They are massive companies, and what we're doing is opening that possibility for new projects to be built by having extensive data on the industry, extensive intelligence, and making that composable for more builders. So that's Resi.
That's Resi, yeah. Stage one, build the big database. And Atom is the big competitor, isn't it, there? And we've talked about this before, but Atom have got the big database. They keep buying up anybody else that wants to move into their space, and you're moving into the space. Not only that, you're moving in on-chain, and you've got their chief data officer as an advisor, as well as Siam Kid. So you've got both ends of the spectrum covered.
I'm like more of a detractor than a contributor.
So yeah, that's an exciting place to start. Right, come on then. What have we got today? What are we talking about?
Well, to start us off, we have been working on something quite exciting. We have a white paper. We have flushed out alphanomics. We have some news with DSV. I don't know if that's shareable. We'll throw an update from over the weekend. So I'll let you guys drive that. Where do you guys want to start?
Oh yeah, we can cover off the DSV piece if you like. We did another OTC investment into Resi in the last 48 hours. It was a very, very good price. We thought we'd scoop up some more. Simple as
that. Yeah,
Job done.
It's great to be working with you guys. So love to see you guys adding more size, and yeah, we have a huge roadmap to build out. And
we know where you're going. That's the key thing here. We've been paying attention during Revenue Search. We've been paying attention during our calls. We know where Res is going. We know the size of the vision and the size of the prize. And we also believe in your ability to deliver it. And like today, notwithstanding, because we've had some roadblocks in the way, you're just a fantastic communicator as well. And I really like that about you. So yeah, we were delighted to get involved with Resi and delighted again to add another slice to our strategic portfolio.
So one of the questions which I think is relevant to what we're talking today is a question I keep seeing popping up in various groups, and people use it as a form of FUD. They're like, oh, Seby, Subnet 46, he's just forked Data Universe, Subnet 13, and has done like one, maybe two changes. Like, where's the innovation? And people use that as a bit of a cop out, mental cop out to go, oh, it's shit. But what is your take on that?
Yeah. We forked Subnet 13 Data Universe when we launched RESI. They are a data lake for social media content or social media data, and we are a data lake for real estate. Or that's how we started, right? In my big like push, and this is what we're doing post for RESI, I stated very clearly, hey, our first goal is to get data sorted. We can't go build out this intelligence without very specific data that inference on shoots does not provide, right? If we go use DeepSeek off of shoots, right, we're not going to have the data we need to be effective. So that was our first goal. So one, we did in fact fork Subnet 13, changed it to use the APIs from Zillow. Our V2, which should be going live today or tomorrow, we tested it all last week, is now doing scraping. So much more cost effective. The validators don't want to hang me or put my head on a stake for costing like $6,000 a month. That's great. And V3 is the essentially the white paper announcement, and that is also coming out today or tomorrow. So that is why we forked it, how we forked it. We're 50 days into this subnet, so it is still a baby. And our next step is building the layers on top. I made a promise last time, as our emissions grow, we'll be able to do more. And part of doing more is moving beyond data. So let's talk about it. Let's talk about the white paper. What does that mean for our subnet? And yeah, so as I stated, we started by building out a database. This database is residential property information in the USA. So if you go to Zillow or homes.com, wherever you search for homes, all the data that's on that page, how big is the house? What's the address? When did it last sell for? How much do they pay in taxes? That is all the data that we are collecting, right? When did it sell? But we had a realization as we were building out the user interface for the product. And that realization was that we can actually do more than one thing at a time. This was part of my proposal to buy the subnet as well. Like I said, and I got memed for it almost by the validators. I said, subnets are not one-trick ponies. This is not like a system where you just say, hey, do this one thing, and it does that one thing, and that's all that it could ever do, right? Until you change the entire incentive mechanism. Instead, I mean, we see subnets, and I hope everybody else starts to see this as a standard, is that subnets are like a process, but especially on the service layer where we live. And that process for us, you can think about it like a prompt. I would like to know the price of this house. Here is an inspection report, right? That is our Oracle product in a nutshell. How does that work under the hood using our updated code base, right? This is V3 I'm talking about, what will be in the white paper. So how that works is we first have the validators parse that request. They parse it amongst the data layer, the inference layer, and then the storage layer. So we will not be using any sort of AWS having any outages. Instead, what will happen is we will go get relevant market data for the property that was requested. That's layer one. So actively building the database based on requests. The next step is then plugging in that inspection file from a certified inspector into the inference layer. And this is where we have a competition amongst model builders, right? Think Ridges. And this will be a competition to create the highest performing inspection agent, right? One of our many agents, but that's for this case, this prompt. And then the storage layer is storing all that data. What they'll be doing is reformatting and storing that data so then we can train our own model, while the inference layer has models that are trained for specific uses. And then all that data can essentially become available on demand. So to wrap it all together, think about when you do a a deep research or an extended thinking type of request, or a web search request into any sort of closed source AI, or any sort of AI for that matter, it's going to tell you what's happening. Okay, we're going to go get the data. Okay, now we're researching alternatives. Now we're trying to make sense of it. And then, okay, here's the output, right? That's the storage. In a nutshell, that is our V3. So that if anybody saw my user interface post, I can put in the chat here.
Or you can share screen. I've made you co-host. Or,
great.
Yeah, show us.
Yeah, I'll pop it up on the screen right now. What we have is this. This is the output. So this is from my X post. That's why we're in this format. But on our dashboard, which should go live today, we have a prompt box on there. You'll be able to ask, and I should probably zoom in a bit. We can't zoom in a bit, but I think you guys can see it. You have a prompt that says, what's the average price of a home in Nashville? That's a request. Resi is thinking. And then it gives you an output, as well as all of the properties, the 13,300 properties that enable this output to be correct. So it also shows you how much of the database we have compiled already. But this is our V3 in one image, which will be documented in our white paper. I hope that makes sense. Do you gentlemen have any questions on that?
Well, I think straight away is asked. So Sergey Perkov has got two questions here. Question one: you're currently talking about a simple real estate information aggregator, but without a visual component of the houses. Who needs such a product?
Great question. Well, the thing is, we're storing that data. So as you would click into those properties, you would be able to see all of the images. So that's one just note before I go into the real answer. The real answer to that question is DeFi protocols, or decentralized real estate protocols. You've seen videos of Vlad from Robinhood. You've seen CEOs from companies like BlackRock, Blackstone. Everyone's talking, right? Larry Fink on news recently saying, hey, the tokenization of everything is happening. It's happening right now. And the fact of the matter is, we have treasuries on chain, equities on chain, commodities on chain. Everything's coming on chain. People are like, how do I tokenize my health records? But in the case of like financial assets, what can't happen is you can't sell or you can't borrow against something that you can't price. And that is the case for real estate. You also, like in terms of sell, imagine being an investor and going to a fractionalized real estate protocol, which you could do right now. You can see images. Those images are posted by or provided by the property owner. And you don't know if those images are from today or from 2 years ago. And now there's a squatter living in there. And because it's in LA, nobody can get the keys or get into the property. So, excuse me, that is the current status of decentralized, fractionalized real estate protocols. And we're fixing that. So we fixed that through 3 products. I can get into them, but I also see there's another question.
Yeah. So question 2, all of this information may be provided with a delay of up to 21 days. How will you address the issue of relevance? There was already a similar subnet called NextPlace.
Right.
They're a little bit
different. So working backwards there, NextPlace was a property price prediction tool, right? What Resi is, it might sound a little cheesy here, guys, but what Resi is a property price prescription tool. We are not predicting price. We are prescribing the price, because we are actually collecting home inspections from certified individuals just in the USA right now. But once we can crack that code, we can scale globally. So that being said, yes, you are entirely right. There is a 21-day period. That's kind of long. It's normally like 3 days, 7 days from all of the transacting I've done in real estate. And what that means is, you sell your property. you show up to the title company, you close that deal, and then that title company goes to the county, and then they submit this information to be published to public records. That's actually, we don't actually get the data from, excuse me, from the county. We get the data from the MLS. The MLS is actually self-reported by the realtor. So you would think that, yes, there's going to be some delay. But what's happening is the realtor does the closing, and then they go onto their MLS portal, and they just change the selection from pending deal or under contract to closed. And when that happens, Zillow, Redfin, Realtor.com, the MLS pages we're also getting data from, they all update at the same time. So our goal is, yes, let's just go plug into the counties so we don't have any third-party risk or downside. But in essence, as soon as the realtor changes this in he or she's portal, then we have that same data.
Cool. Did you have any questions, Mark?
No. So the portal is going to go live today.
What was that?
It's going to go live today.
That dashboard experience?
Yeah.
Yes. So we have that dashboard experience right now. What we'll be doing is sending people to like hey, this is what it looks like. This is how you use it. Come and join our wait list. But yeah, we'll have that up and live. Our website's already live today. So if you go to resilabs.ai.
How are you going to get people to that page? How are you going to get people interacting with it?
Great question. So right now, there is a company, there's technology, it's called IDX. Every single real estate agent or broker uses that software. And what it does is it is a white label engine for essentially Zillow. How it works is I'm a realtor. I want to provide great service to customers. I need a lead generation tool. I need a place for people to see me as a trusted source of information. So what I do is I say, hey, go to sebyrubino.com. This is not a real website, by the way. So go to sebyrubino.com or Seby the Realtor, and you're going to find a website that looks almost like Zillow. Plug in a property and see all of this information about these properties on a map, right? A Zillow fork for every single realtor. That's what IDX does. We are, as we increase, push the new standard for real estate intelligence, we are essentially using this interface as an example for that future. So we'll be going to realtors and brokerage offices and saying, hey, you guys can use this for free. With that, that is our growth point, right? We call it one to many to more. Right? If we go get a brokerage, they have 150 agents. They all start using Resi as the back end. There will be a watermark for Resi. New products will be built on top of it just by that viral loop. So it is a white label tool for realtors to provide intelligence products to their prospective customers and customers. That makes sense.
And
Yeah.
how much time do you need? So you have, wait a minute. So you have all these people doing all the surveys for the houses, etc. They're uploading all of the data. Resi's hoovering up all of that data. How much time or inspections do you need before insurance companies or lenders will use your data to give loans based on that?
Great question. Okay. So it's really just case study, creating a case study and saying, hey, or like a research study, saying, hey, Zillow, which nobody uses for like actual professional work, it's just kind of like, oh, I'm perusing what's maybe the price of this property. Zillow has a price. It's kind of like an industry standard. And much like Next Place, how they were doing it, we're also going to be benchmarking against that to start. There's also other pricing engines that do this, but they're a closed source. We don't know how they're coming to those conclusions. And we'll be benchmarking to create this research study against all of those prices. So time. How long do we need? How much data do we need? Ideally, we need a case of like 1,000 inspections and appraisals to then, and also a certain amount of capital, say $10 million in property sales on decentralized fractionalized real estate protocols for them to say, wow, people actually trust this information. They took the conversion rate of investors from 0.1% to 5% on this for this company. So bundling all that information, packaging it up and giving it to investors, or rather builders, right? The biggest type of builders in this space that have these insurance companies and mortgage companies, will be able to provide off-chain infrastructure in an on-chain manner.
Nice. Okay. So I guess this then leads to the question everyone will keep asking you is when revenue?
Yeah. So recently we're still closing or signing documentation with them and doing terms, but we have two sides of revenue right now. One is a data product, right? We've talked about this on the show before. It's called Predict Casa. Investors tell us where they want to do deals, what type of deals they're looking for. Same with realtors, right? They're looking for people selling their home, and then we go find that. So right now that's being done off of Bittensor. We will pull our data to make that possible, and that has revenue. Today, our sales agent is on 6 calls selling people, right? And he was on calls all last week. So right now we're booking calls, and I could put out a little report on this from our media buyer, but we're booking calls at like $30 a pop for investors saying, hey, we want your $3,000 product. So those sales cycles are, a month, 2 weeks, a week, and that's happening. On the other side is this Oracle product. So that is somebody that we just recently got to, closing terms with in signing. And it's actually a commercial real estate company that says, hey, all of the investments we've offered, they're super low conversion. People don't trust the pictures. People don't trust the prices. And that's why they reached out to us. So that is the other angle. How that works, and that's probably a good way to go into pricing, is on an upfront and subscription basis. So if you want to use our appraisal engine, what you will do is pay, let's say, $500 upfront. That is one of our prices for the appraisal. You pay $500 per month, and then, $500 upfront, and then $100 per month, and that goes into the management cost that all of these fractionalized protocols kind of earmark for each property, right? It's like 2% of the property goes to management, 2.5% goes to management in terms of the net income. So we are well within those bounds. And yeah, I see a question of have we connected with Lead Poet yet?
Not yet.
Yeah, but you would be the guys to connect us.
Yeah, when it's up and running, eventually. So, ooh, is this you?
That's Anthony.
Anthony, I didn't even know.
I think Anthony's just got bored. I think he's just like, he's been in Zoom for the first time for a while. He's clicking around.
I didn't even know. Wow. Oh my God. I didn't know this. I've been using Zoom for years. I didn't even know. Wait, clear page. How the hell do we do? Okay.
Anthony's turned it off now.
This is an interactive revenue search, guys.
Yeah, I had no idea you could do that. Anyway, moving forward.
Did you say you were generating those calls for $30 a pop?
Yeah.
That's
on what? On just on Facebook ads?
Yeah. So on Meta, we're running, or Meta, so Instagram and Facebook, we're running ads. What we basically consider, and this is the stats from last time we ran this offer, was anywhere from 15 to 25%, let's say 20% closing rate on those calls. It's a 2-call funnel. So we do a discovery call, and then they jump on a call with me to go over any sort of last questions, concerns. We even offer a guarantee on the product that if they don't close a deal, we will continue to give them data for free until they close a deal. So we have like really great terms, really great pricing, and that's really it. Yeah. So
I mean, that
$150 per closing is where we've landed on a $3,000 product, which is well beyond the 3x, 4x that
Yeah,
you and I discussed
it's
on the
100.
last call.
It's 100x.
so where are the bottlenecks in that? Because the bottlenecks isn't the market, is it? The total addressable market's plenty big enough.
Yeah. So the bottlenecks there is we're trying to stay lean, truthfully, right? If we go and say, oh, we're going to scale out this team and start selling a ton of alpha, people are like, what the heck, right? Why are you guys selling so much? So it's like we're trying to stay lean, but we're trying to stay mean. And that mean part of it is we have an inside sales agent. We have a media buyer, right? We're actively spending on ads. I'm still, for the most part, funding this operation. And there's really a balance there, right? If we just go full aggressive mode and do it all at once, we'll get too many leads that we can take on, right? I still have other responsibilities, designing the incentive mechanism with the team, showing up to shows like this, and pushing the macro view of the subnet. But yeah, we are hiring. To answer your question, we are hiring, and we're also hiring people that are not just technical, right? This is our next hire is somebody that is a writer who's also a graphic designer, someone I've worked with for a while. And we're looking for these all around wear many hats type of people that can also help in this sales funnel.
Yeah, that is what you need, isn't it, in a small business? People with a broad skill set. But I am going to push back a little bit here because you are doing OTC deals and you're using the revenue from those OTC deals to buy back alpha.
Yeah.
So what we're doing there is we're turning, say, a $50,000 OTC deal into $50,000 worth of buybacks.
Correct.
Now, if Siam or I had the $50,000, then we would spend that on Facebook ads and the person to do the first call and someone to replace you doing the second call. And then we would generate so much revenue from that $3,000 product, even if our funnel was half as good as your funnel, but it didn't involve you, that we would end up doing $250,000 worth of buybacks for the same $50,000 spend.
Right. So you're 100% correct. And that is our goal. The problem is, and I learned this actually at a past company I worked at, is you can hire people, right? But not all hiring is the same, right? You can hire the wrong person.
Yeah.
1. 2, you can hire somebody, they could be the right person, and then they could just not be ready for that circumstance. I'm at the point where I'm taking these calls and recording them for our inside sales agent, or that was the past 2 weeks. Now he started to take some of these calls and book me on calls. And there's a progression here. So as we do more OTCs in the future, the likelihood of us using that for buybacks goes down because now we have someone who's trained and ready for more ad volume. During the last month of this week, or last week of this month, forgive me, we've actually slowed down the ads because we're getting too many calls for this person to be effective.
Yeah.
With that being said, we have to turn up those jets. If we don't turn up those jets, then we're just,
Yeah, you know that you do. Listen, it's staff are never easy to get, and staff always take a little bit of time to come online, and it's really, really easy as the business owner to say no one can do this as well as me and I need to do all the sales calls, but then you just make yourself into a bottleneck. And here you need to uncork the bottle. You need to work out as quickly as possible because your funnel, if what you're saying is true, your funnel is so effective that it could be half as effective, a quarter as effective, and still you'd be making money hand over fist because of the scale of the media, Meta, and the total addressable market size. These two things, where one of these things isn't scalable, then you have to treat every lead with the utmost respect. Where both of these things are wildly scalable, then you can burn through leads. For one, because the leads will have forgotten that they've been burnt within 3 months, and they'll be back to buy again.
Yeah.
So you can burn through those leads, and so you could make it a lot worse. So I'm pleased that we've had this conversation. Yeah. I would implore you to work and let us help you, but let's find more people that can come in and do a worse job than the people that you've got in the two places at the minute. You're one of them. Because you're right, you should be focused on the high value, high leverage things like this, not on closing those $3,000 deals. There's other people that can do that. So on this call, we've got Harry. Harry joined our team a few days ago. He's just listening to calls. He's coming on calls. We are training him up, and we know it's going to take a little bit of time before he really starts to add some value. But if there was $3,000 per call on the end of it, then I might be pushing him through the process a little bit faster. And for you, it's a double whammy, because if you can find 3 people to do the call that you're doing, you don't need to do the call. Plus, you can do it. You can do 3 times as many.
Correct. Yeah, I'm right there with you. It's we're cool. 2 weeks into having somebody take calls. So I think that another couple weeks. And kind of allowing the lead flow to be regulated. If they're in calls all day, every day.
You've just said that you've had to turn the number of leads down because you were getting too many leads.
Yeah.
You're getting too many leads. You could spend more money. It sounds like that if we just took the people on this call and just distributed some leads, we're going to make more money than we are making. And it's very rare in business that you have that. And when you get it, you make the most of it.
Right.
It's lovely in business when you have something that works, but whenever you do, you just light a fire underneath it. You've got to make the most of it while it's there.
So am I understanding this funnel correctly? Whether you call it a lead generation funnel or client press, let's just call it for what it is, a funnel. So you're doing Facebook ads up here. You're then generating calls here. That then leads into call 2. So long story short, it's $30 at the top here equals $3,000 down here with the sale. Is that how I'm understanding this correctly?
Yeah.
So what's the conversion rate? How many calls do you get for this first stage?
On the first stage, it's a book call. So it's $30 book call. We're spending $50 per day. Yeah, $50 per day.
Oh, wait a minute. So, we're getting some... So when it comes to marketing, there's some metrics here, which I think are being confused. So if you're getting $3,000 for a sale, and it's cost you $30 to get that sale, that means your cost per acquisition is $30. So let's...
Oh, no. That's $30 to get that call.
Okay, right, okay.
Right. So then we have 5 to 6 of those calls that need to be booked.
Okay,
to make it.
Let's break this down. To get one sale down here, which we know is 3K, what's the conversion rate from sales to call 2? From call 2 to
let's say 20%.
20%. Okay, so it's 20% there, which means you need 5 calls there. What's the conversion rate from call 1 to call 2?
From call 1 to call 2, it's like 80%.
80%. Ooh, okay. So
yeah, if they show up to that first call, that is. Right, so there's probably another 20% drop off on the first level.
Okay, so that means you need 6.25 call 1s, and then this metric is going to be, I mean, this will vary, but what you're saying is that this call 1 here, so one of these costs $30.
No, because there's a drop off. So
yeah, so it's a bit more.
It's costing probably $40, I reckon, for that first call.
Right.
Got it. Okay, so actually, to get one sale,
if we were spending more money, we'd get better rates.
So really, it's $40 times 6.25 to get 3K, isn't it?
Right.
So what this means, you put $250 in Facebook ads to get 6.25 calls, which then gives you 3K. So okay, it's still wildly amazing, because I know so many people that are literally sales team builders, where what they do is they go, right, Seby, these are your stats. What we're going to do is put some chimpanzees into a call center, and their stats are going to be shit. They're going to go from call 2 to sales, 5%. Call 1 to call 2, they're going to shit the bed. It's going to be 20%. But what they do is they scale sideways. So at the moment, you're one little funnel there. That's Seby. What they then do is go, right, we'll just get 20 chimpanzees, all with shit leads or shit, conversion rates, but they will get better. They'll fire the bottom 20% of salespeople every week just for shits and giggles, just to keep everyone on their toes. But what you'll find is that even with these shit numbers, you go from 1%. We can work this out. So one sale divided by 0.05. That means you need 20. So let's divide this. 1 second. I mean, if this really is the case, this subnet is so scalable. So one sale down here at 5%, you need call 2, call 1, sale, Facebook. So 5%, you need 20 call 2s. It's now 20% conversion rate there. So you do 20 divided by 0.2. So you then need 100 call 1s, and then 100 times 50. Sorry, I could have done that in my head. That's 5k. Ooh. So now it doesn't work with those shit metrics. So then you have some absolute bottom line benchmarks, because with these shit conversion rates of 5%, then 20%, it doesn't work because you're blowing 5k to get 3k, plus the salaries of all your staff. So actually, yeah, you may have to go, right, these don't work, but then, yeah. But this is now not a subnet game, it's not a Bittensor game, this is ancient sales and marketing funnel stuff, which Mark and I have been doing for 20-something years. Have I said anything incorrect, Mark?
No. I mean, but I would just. It's so good right now that we could make it worse, and that would make it better, and that's what you love to see.
Yeah.
Like, if we were spending more money on Meta, we'd get more people through. If we were spending more money on Meta, we could do a more effective split test on the landing page, which then would mean that we'd get fewer drop-offs. Could we do a group call as stage one rather than a one-to-one call? We'd definitely get fewer people drop off if it was a group call, because they wouldn't feel the pressure of the sales piece. You think you're the best person at making that sale?
At the moment, you are. At the moment.
At the moment you are, because nobody else has been tried in that role. There'll be other people that are better. Why does it need to be 2 calls? Why couldn't it be 1 call? $3,000 is $3,000 is a completely arbitrary number. Would conversion drop off if it went to $4,000? But that would allow us to spend more on the front end. Would it be markedly better if it was only $2,000? Could we do it as a split where we charge them $4,000, but we charge them $2,000 now and $2,000 when they get a sale, taking your element of the guarantee, but kind of backing ourselves.
Yeah.
We still bank the 2. We're not going to get all of the follow-on 2s, but we'll get a good number of them. Brutally, there's so many different elements and variables and knobs to twiddle on the way through that we could and we should, because you've got something that works, and we knew that it worked because I remember back to our first revenue search when you said that we kind of ran this from the basement, and it worked beautifully then. And what were your numbers like then? What did you get revenue to?
So it was we were selling it for $2,500. It was costing us $500 to make those sales.
Yeah. So you knew then. I mean, I remember being excited then about this, and I'm as excited now because you've deployed the same strategy. There's room to play with here, but the biggest cost of your current funnel is that you are sitting in it. Make no mistake. And then the second biggest cost is that you are investing OTC funds in buybacks without putting them through your fund multiplication machine. Because that's what you've got here. You've got a capital multiplier in this funnel, and you're not making the most of that capital multiplier, and you're not making the most of your time. And that is the end of my sermon.
It's a good sermon. No, I definitely agree with you, right? But like Siam, you said, right, there needs to be a website for this, right? And Mark, you said that we need to split test those websites.
Yeah.
And we need to make content for this funnel. Right, I'm like not only limited by that factor, which takes a week, 2 weeks, and we just started advertising I think 2 weeks ago. but also getting somebody in place. So yeah, we have our feelers out to the people that we've done sales with and grown sales teams, you know, alongside in the past. And I'm going to be running this all by you guys. Hey, this is what we're thinking. Am I going a little too hard on this now, or am I still being soft?
Yeah, let's do it. And then I assume we're keeping all of the leads nice and safe. Everything we generate through Meta, all of those email addresses, all of those contact details, we're keeping those nice and safe so we can go back to them. No value lost.
Yeah, and this is the first sale, right? Customer lifetime value is really the ROAS, the multiplier, ROI, however you want to say it. That's the real number. So instead of saying, oh, we spend $250 to get 3,000, it's really we spend $250 to get 5,000 over the course of 1 year's time, or whatever that case may be when we see it come to fruition.
Yeah, I just did more sensible numbers, and really you just need to find people half as good as you in this funnel. Someone, instead of doing 80% from call 1 to 2, just does 40% conversion. And then someone, instead of doing 20%, did you originally say 20% from call 2 to sales?
Oh, yeah.
Yeah. So someone just to do 10%. And in this case, the numbers still stack up. It's costing you a grand up here to get $3,000 down here. So really, your task is, can you get 30 people to hit the phones? Or no, just get one extra person to begin with.
Yeah,
can you get one first? And then we get 10. And once you get 10, you get 100. And that's how you scale businesses like this, pretty damn fast.
Scale it really, really fast, because when you've got metrics like this, then you come to people that have got cash and you say, I need some cash because I want to scale this with 4 more people, 6 more people, 8 more people. And they're like, here's the cash.
Here's $1 million.
Here's $1 million. Well, you ask Siam then rather than me, because I probably would have given you about 40.
40 million. Yeah.
He's
what we're doing. And I think what I should also do, seeing how engaged you guys are, I'm seeing the chat pretty engaged on the subject, is put out the report that we get from our media buyer and say, hey, this is what it looks like from our end. This is how well we're converting people, and our sales team is growing, because this is what buybacks, right? We're not paying salaries with money.
People love to see revenue coming into subnets. People love to see subnets making sales. And what you're doing here, and I know that you alluded to it, is you're not making a sale to get a customer necessarily. You're getting the customer to make the additional sale. Like you're building a list of customers here that's going to have significant value for you in the future, but you're building that list very profitably. You're starting the relationships.
Yeah.
While stacking the cash. So yeah, I think that there's a lot of mileage in what you're doing here. So yeah, let's focus on that.
Right. I think we should call that a day. Unless there's anything that we're missing, Seby. Is there anything that you wanted to talk about today that we haven't asked about?
The one thing was alphanomics.
Yeah, let's do it.
We do have something updated for that. I can go into that for, say, 3 minutes here.
Yeah, go for it.
Back and forth. Yeah, so this is I want to make it so that somebody could just watch this and they don't have to watch or read our entire, say, 20-page white paper.
Yeah.
So the first part of this was, how does it work? 3 subnets, data, inference, storage, completely decentralized, permissionless, and for the use cases we've been talking about. The other side of that is we are infrastructure. So we are only as good as what we can attract to build on our technology. How are we attracting people to build? Where are they building this technology? And yeah, so let's go into it really quick. We have current pricing. The current pricing for an appraisal is the base price of $500 per property. A lot of these platforms charge like $2,500 to $10,000 to tokenize a listing. Yeah, that's a big part of why this doesn't work at scale as well. But those are our customers. What we are saying is there is tiered staking. So if you want savings on that upfront and per month pricing, you have a few options to get that cost down. And the only thing that we're incentivizing is alpha activity. And so whether that's staking, more usage, more buy pressure for that matter. And what that looks like for us is step one is you want to save money? Great. Stake X amount of alpha with us. Two, will be we did complete this thought and did some research into the numbers, but we also are going to be sponsoring liquidity for builders that have a token on their end, but they say that they want, and they do, pair with our alpha token or wrapped alpha, whether on Base, Solana, wherever. What that creates is essentially like the Tau alpha relationship, right? You're syncing Tau into alpha, and we'd be doing the same exact thing, or say how virtuals grew, right? You have to buy virtuals to buy their agents. So that's another option. And then we've also, we're at the closing line on a couple of different chains to launch, but launching a side chain that runs the gas token is our wrapped alpha. And if you launch on our chain, stake RESI alpha, LP with our token, then you essentially have the best possible pricing because you are driving as much activity as possible to our alpha token. So that is the alphanomics. People were saying, you're launching a second token, coming at my throat and all these chats. And the fact is, no, we are going to be incentivizing people to create their own tokens, which we have no say over. And in the best or worst case, however you want to see it, we're going to be sponsoring their liquidity so that we can increase the buy pressure and also the return on our alpha for that matter. That was my piece on the alphanomics.
Yeah, I'm hard with. I struggle to comprehend things with the audio. I need like stickman imagery, like or like what Mog did with his Hippius alphanomics thing. So, can you just go through that last bit again? The last 10 seconds there.
Yeah, was it the different tiers?
Yeah.
Yeah. So, staking is essentially level 1.
Yeah.
Level 2 is LP with our token. If you have a token and our alpha is how you buy it, people are going to have to buy our alpha. And then the third would be to launch on our, say, RESI chain, which we're not sure which, Base or Arbitrum it's going to be. But if the gas token is RESI, if all of the main protocols are LP'd with RESI alpha, then we will create an environment for buy pressure and also viral marketing, right? Bittensor gets a ton of marketing because I'm screaming about it every day as a subnet owner, right? Same thing for this side chain. If it's the real estate hub of our industry, that is the best possible outcome. So that's what we're trying to create.
Okay, sweet. Well,
I think we need to work on an articulation of that, don't we, with some stick men.
On a
Yeah, we're gonna do like a very nice graphic. So I'll make sure I get that over to you guys, and I'll do a post.
Cool. So we've had a few questions come in. Let's just cover those off. What's the typical customer retention after a sale?
Yeah, so this is anywhere. It depends basically on state. You state to state basis. But we're looking at somewhere like 60%, 80% of our customers buy more data from us. But what we notice is they don't buy as much. We sell them a lot up front, and then they're like, we really don't need all this data, right? Because then we got to fund a team to go and do this, and they're trying to reduce their amount of callers, reduce the amount of seats they need to pay for, reduce the amount of time to a deal. Because the data is good, they're just trying to reduce the data that they need. But yeah, somewhere from 65 to 80% on our last funnel, and so far we are still on our first 3-month phase with all of our current customers.
So are you saying that, like previously, they would have bought more data from other places because the data's not as good, so they need to filter it to get to the good stuff?
Yeah.
They make that same mistake with you on the first purchase, i.e. they help themselves to like as much as they can carry on the way out. And then when they come back second time around, they're just like, we'll just need this bit.
Right, yeah. Some people I I already have the guy that we sold to in the beginning asking me for, like our first customer on this new run. He's asking for 10 times less data because like I don't need all this data, right? But I need your data, and I'll be just fine.
That's nice. I don't understand the need to involve miners in solving the subnet task. It seems more like a regular office task than DeFi. Hope I'm wrong.
I don't understand the need to involve miners solving the subnet. The subnet task is collecting data, real estate data at scale. If you were going to run an API against that, I mean, Zillow is probably going to launch this product, a fork of ChatGPT, and then they're going to offer this data. But their costs, even though it's they have a database, their cost is going to be much higher, right? Anybody using Atom data, their costs for that product are going to be so high that they won't be able to compete with us in the long run. They won't be able to be infrastructure. It'll be just that, right?
Yeah.
The reason why, the fact that we're on Bittensor, we are delegating these responsibilities to miners, and we're doing it in a way that's not balanced. It's actually like say 150 miners for data, 50 miners for storage, and 45 for inference and model training competition. That makes it so that we can in one shot get say 20,000 records and then have that all used through a specific model and then store it in like 15 seconds, 30 seconds.
Yeah.
So yeah, that would be my, and I don't know if a DeFi, right? It would be more like DAI, right? We do need DAI. And then the DeFi is, it needs to be permissionless and provable. Chainlink works with, I think it's called Smart Zip, right? They have a whole tokenization blog. But Smart Zip was in talks with Chainlink, and it doesn't seem like they're moving together because there's no way to prove it. They're going to give you a number for the price of a home and not tell you how they came to that conclusion, not give you the model that they used to get to that conclusion as well. So,
and Sergey, with your question, you can also apply this to the limit. Let's say with Subnet 13 Data Universe. Data Universe has, I think, over 52 billion rows of data. So you could say, hey, Subnet 13, that's just like an office task. Well, how many humans do you need to get 52 billion rows of data? And that's where the power of Bittensor miners come in. And Resi is exactly the same. Seby here has a task of hoovering up any and all US residential data and then storing it safely. So yeah, that's where the miners kick in. And for the storage, you're using Hippius.
Yeah.
So even better.
When they came
10x
out,
cheaper storage.
Yeah, we were pumped to work with Hippius, and then we actually are working with their team to implement some features that actually make it possible. And hopefully the features that we help them work out also help other subnets use their tech. Because, they're so new, but they're also so effective that it's like a no-brainer.
Jared L says, so is this essentially making an illiquid market liquid?
That's the third tier of your tokenization.
Yeah, so that was, I think that's when he was asking that. That's basically asking on this other chain that we have, if we're LPing with this token, with our alpha, and a user or say a customer of our infrastructure and their token, that is what we are making liquid. Am I answering the right question here? Do you guys understand that question?
Yeah.
Right. Yeah. So if we sponsor the liquidity, one, it's better for their user, their token buyers, their investors. But we also aren't just doing this for free, right? We're getting fees on top of that liquidity pool. So that would be what we're doing. And then Sergey, I think Siam answered your two other questions in one shot there. Basically, yes, we're optimizing the process for resources. And if we put our own employees, say on an MLS account, it wouldn't be like, I wouldn't be on Bittensor, right? I also wouldn't have like this moat of, all right, you can ask anything and it goes and gets it for you. And then as there's more requests, more demand for that, we can have a marketplace of who gets to put our miners to work. And then that creates its own new flywheel. So Yeah.
Cool. All right. Well,
Amazing.
I think that draws a line under this first Zoom revenue search.
Hopefully our last Zoom revenue search.
Also our last, but we're supposed to be back on again in 40 minutes. Let's see how we're looking on that front. We might have to postpone that if the platform is still down. But I think the lesson that we've learned is that we actually need 2 options to do a revenue search.
Jesus.
So we can just go live on whichever one's working.
And who's making the Hippius app for streaming? Because they're not down.
Someone needs one.
It's an open invite, guys.
Yeah.
True story. Cool. All right. Well,
Right.
thanks, Seby. Appreciate your time as always. Thanks for the updates, and let's make some sales.
Let's make some sales. Thank you, gentlemen.
Let's make some sales.
Amazing.
Right.
Right. Cheerio, folks. Ta-ra.